Now, for more insight and analysis of the Fed's move, let's bring in Joe Minarik, Senior Vice President and Director of Research at the Committee for Economic Development. Joe, thank you so much for coming on set again. I guess my first question is, why do you think the Fed cuts rates again this year?
The Fed sent a pretty clear description of the U.S. economic situation. The situation is strong at the consumer level. Businesses are a little bit anxious about the state of U.S. trade, but taking all together, it's an okay, relatively steady trajectory of growth. Chairman Powell made reference, however, to risks in a strong economy, and what he's trying to do is buy some insurance with respect to those risks, and that was really his message.
So do you think this is largely an economic decision instead of bowing to pressure from, say, President Trump?
I have a great deal of confidence in the members of our Federal Reserve Board and the presidents of our Federal Reserve banks. I believe they are making the best decisions they can make in an uncertain and somewhat unpredictable economic environment. This is why they get the big bucks. This is really when it is difficult to make these kinds of decisions. I think they're calling them as they see them.
Chairman Powell mentioned the U.S.-China trade uncertainties. How do you think the renewed trade talks this October between China and the U.S. will weigh into Fed's future rate-cutting decisions?
Well, it's certainly better to be talking than not. At the same time, there's a lot of question about what the prospects for these talks are. And that really gets to the essence of the Federal Reserve's problems. There's a lot of unpredictability out there. You have these negotiations, and there's a question of how well people are getting along, what the prospects of an actual resolution of this trade war is. You have Brexit, which could go either way. You have weaknesses around the world over which, of course, U.S. policymakers have no control. So the Federal Reserve is in an environment where, as are U.S. business leaders, you could pick up your smartphone and look at the news breaking at 1 second, and it could be changing your environment in a very significant way. It's that kind of uncertainty that makes it hard for the Federal Reserve to make these kinds of decisions.
And then we noticed that there is different opinions, a division, if you will, inside the Fed about what they should do this time around and also what they should do going forward. So what do you think the Fed will do in the remainder of the year? Potentially two more rate cuts ahead?
Well, what the Federal Reserve is doing, I believe, is making its judgments from meeting to meeting. The fact that this environment is so uncertain, it pretty much guarantees that among the members of the Open Market Committee that you're going to have some diversity of views. Different people see different things, including, of course, the bank presidents in different parts of the country will see different circumstances. So what they are trying to do is they think they put themselves in about the right position now, and this is, of course, across that board on average with people having different opinions. They think they're in the right place now, and they're going to be looking at the data as they come in over the next month until they have their next meeting, and they're going to make a call on the basis of the new data. It's a highly uncertain, highly volatile environment, and the fact that things are unpredictable really is pretty predictable.
And what do you think this round of rate cuts will affect the economy in the U.S., both short-term and long-term?
Well, the first thing that the Federal Reserve is doing is it's sending a message, we've got your back. It is also making credit a little bit less expensive for consumers and for businesses. Of course, it already was fairly inexpensive. The one thing that we have to look for, and the one thing that I think makes many traditional observers of the Fed worried, is what happens if the Fed finds itself in a position where it's got political pressure to cut rates, it's not quite sure whether a rate cut is necessary, and it has to make a decision about maintaining its credibility in international markets. At that point, you could have the Fed in a really painful
A
position.
thin line the Fed and the chairman is walking right now. Thanks so much, Joe Minarik, Senior Vice President and Director of Research at the Committee for Economic Development. Thank you for your insights, sir.